Welcome to this week's Zacks Earnings All-Stars videos, and this is a big week for earnings. We're getting over 400 companies reporting, and many of them are the red-hot growth stocks, including the tech titans, or as we like to call them, the Magnificent Seven. We've already had Tesla report out of the Magnificent Seven, and it actually wasn't that good, but what will the others do? And we're going to check in to see what do those charts look like? Are they hitting all-time highs going into this number? Many of the stocks are. But I'm also going to diverge a little bit out of the Magnificent Seven this week because there are other companies reporting, and some of those are red hot too. What are they? Let's dive in and see. So the first stock I want to talk about is one of the Magnificent Sevens. And I'm only bringing you the 5-year chart right here because Microsoft actually has a very good track record of beating. They beat the last 4 quarters, and they've only missed, rarely over the last 5 years. But look at what the stock chart is doing. This is mostly in the recent year driven by AI. And you can see it's busting out to new all-time highs, but as many of you also know, it's not cheap now. I took a look at the price to sales ratios on these stocks for this week because I feel like with the growth stocks, that tells you a little bit more about what's going on than just the PEs. And Microsoft price to sales ratio is now at 13.8. The last time it was this high, over 10, was in 2000 when it was the dot-com bubble. So this has people getting a little nervous about some of these stocks like Microsoft, but we're just going to have to wait and see. Many of us own this in our own personal portfolios. I do, and I know many of you do too, either individually or through the S&P 500 or the QQQ or various other ETFs. So this is going to be one of the big ones we're all going to be watching this week. Then we're going to switch over now to one of the other Magnificent Sevens with not as good of a track record on beating. And I'm actually going to show you the earnings surprise chart for Alphabet, ticker GOOGL. This is another one I own in my own personal portfolio. You can see there's a lot more red here because Alphabet has not really cared whether or not they met or beat. And so they had those 4 misses in the dark times of 2022, as we're calling them. But it's turned it around the last 3 quarters and has resumed beating once again. These shares are now busting out to yet another new high, just like Microsoft. But its price to sales ratio isn't quite as steep, trading with a price to sales ratio of just 6.4. So at least it's under 10 here for Alphabet. But what are they going to say and what's happening with advertising? We're going to find out. Then I'm going to talk about a restaurant stock that should be red hot, but really isn't. Even though it keeps beating, it's beat 3 quarters in a row here in 2023, and now we're starting 2024. But it's really the sales growth and the same-store sales growth that's really good with Starbucks right now, especially in North America. It's been crushing it, but the stock hasn't really participated, and that could be because the PE ratio is a bit higher on Starbucks right now. But I took a look at the price-to-sales ratio. It's just at 2.9 times, but none of that is really telling you that this is a value here. But while its competitors like McDonald's are breaking out, Starbucks staying a little bit reduced. I also own this one in my own personal portfolio. So we'll see what it does this quarter, but this is the holiday quarter. It should be good. And then want to switch it over again to another high growth name that's kind of back in favor again, Mastercard, ticker MA. As you can see, busting out to new all-time highs. Like its competitor Visa, it's got a great earnings surprise track record. Just that one miss there in 2020. But other than that, it's been perfect and now busting out. What does its price to sales ratio look like? Well, it's pretty pricey, 16.8 for Mastercard. But no one has ever said Mastercard or Visa are cheap stocks. and they remain fairly expensive, but breaking out again. And then we're going to finish it up with a unknown. Modine Manufacturing, I own it in the value investor portfolio here at Zacks. That's how I discovered it. And you can see that this deserves to be amongst these other great stocks. It too is busting out to new all-time highs. It's got a great earnings surprise track record. It's beat 8 quarters in a row, including massive beats in 2023. So what is this mysterious stock? Modine Manufacturing does a lot of the cooling, and some of that is in the data centers and the hot areas right now. So stock is taken off. Price to sales ratio is pretty darn cheap at just 1.4. So that's a big difference between Microsoft at 13.8 and Modine Manufacturing at 1.4. So we'll see what some of these lesser known stocks are doing and whether or not this data center area can remain this red hot. So there's 5 growth stocks that are very hot, with 4 out of the 5 hitting new all-time highs going into this number. And that's what we're going to see with a lot of stocks this week, because a lot of these names are busting out. It's not just the Magnificent Seven that's leading the market higher. It's a lot of the other growth names that are now rallying. But can they keep it up? I don't know. But this week is going to be, as I said, very important for the earnings season. And I'm going to be bringing you all the earnings updates as we go along. And I'm going to be bringing you some more growth stocks. So you want to tune in. Get us all at Zacks.com/YouTube. Those are all of our videos over there, including the top stock picks of the week. You don't want to miss that one either. But be sure to get us somewhere. And I'll see you again next time with some more earnings all-star charts.